2025 was a humbling year for me as an investor. If you looked at my portfolio in October, you would have seen conviction. You would have seen someone who thought they were smarter than the market. I spent 10 straight months buying the exact same stocks over and over again, convinced that I was buying the dip on the next big thing. But by November, that conviction was gone. I ended this year with $25,000 in realized losses. I wiped out 10 months of buying in a single afternoon. Now, hearing that number, negative $25,000, it sounds like a disaster. It sounds like I panicked. But the truth is, taking that loss was actually the best financial decision I made all year. In this video, I'm going to do a full autopsy of my 2025. I want to walk you through the psychology of stubbornness, how I navigated the Trump tariff crash in April that freaked everyone out, and I'm going to show you a document that tracks every single trade I made this year. When I reveal this chart in a second, you're going to see a pattern that's honestly kind of embarrassing, but it taught me a lesson about opportunity costs that I think will provide value to every investor. Now, while selling these stocks was my best financial decision, the most rewarding decision of 2025 was undoubtedly starting this YouTube channel. It's been about a month and a half since I posted my first video, and somehow, someway, in that short time, we've already passed 1,000 subscribers. I want to say a genuine thank you. Whether you're here to agree with my trades or tell me exactly why I'm wrong, I love the discourse. I read and try to reply to everything because that interaction, frankly, is what this is all about. This channel is just my experience, but the community we're building in the comments is where the real value is. So thank you for being a part of it. And I promise there will be more awesome videos and discourse in 2026, so I hope you'll stick around. All right, back to my 2025 recap. Let's start with the mistake. And I'll be honest, it was a classic case of recency bias. For the first 10 months of 2025, CAVA and Sweetgreen were my darlings. Every time the stock dipped, I told myself, this is a discount. The market is wrong and I am right. You can see it in the chart. January buy, February buy, March buy. I was catching a falling knife and convincing myself I was just dollar cost averaging. The problem with recency bias is that you start to anchor your expectations to the past price. You think because a stock was at $100, buying it at $80 is a steal, and buying it at $60 is the deal of a lifetime. But what I ignored was the fundamental rule of momentum. What goes down can go down a lot more. I was being stubborn. I was married to the idea of these stocks rather than the reality of their price action. I ignored the opportunity cost of that money being trapped in a downward spiral while other sectors of the market were starting to wake up. Now, before we get to the sell-off, we have to talk about the elephant in the room for 2025, late March and April. If you were investing this year, you remember the panic. Trump announced those new tariffs and the market absolutely tanked. It felt like the sky was falling. But this is actually one of the things I think I got right in the first half of the year. If you look at the chart for April, you'll see I was buying Amazon, Google, VTI, and Tesla, and a lot of it. While the headlines were screaming sell, I was deploying cash. I remember specifically in April looking at the fear index and deciding that the tariffs were likely a political tool, not a business ender. Look, at the end of the day, I think Trump views the stock market as a real-time report card for his reputation.
A lot of winning out there, and we're having a good day in the stock market, as you can see, an all-time record day, and hopefully it continues. I think it should.
His playbook is pretty consistent. He opens with extreme public demands that seem impossible to meet, but that's the point. It shifts the frame of reference, making his actual goal look like a reasonable compromise. By imposing sudden deadlines and making unpredictable moves, he forces the other side to react on his timeline, forcing a rapid response instead of a slow, careful negotiation. Recognizing that playbook was the key to my April purchases. While it was painful to see massive red figures day after day in my portfolio, I didn't see a long-term economic disaster, but rather a negotiation tactic, albeit an extreme and unprecedented one. I took a gamble on the fact that he wouldn't sacrifice the stock market for long because he views it as a measure of his own success. So I treated the April crash for what it was, a temporary discount driven by a negotiation strategy, and I bought with both hands. And since April 8th, the lowest point of the market in 2025, the market has risen nearly 40%. Taking advantage of the volatility in early April was crucial. It kept my portfolio afloat while my CAVA and Sweetgreen positions were dragging me down. It's a good reminder that when the macro picture looks the scariest, that's usually your liberation day as an investor if you have cash on the sidelines. But let's fast forward to November. This is the pivot point. This is the moment I had to swallow my pride. By November, I was sitting on significant unrealized losses in my high conviction plays. I had to have a very hard conversation with myself. I asked myself, if I had this cash in my hand right now, today, would I buy CAVA? Would I buy Sweetgreen? Would I buy Target or Nike? And frankly, the answer was no. So I did something that is really hard for a lot of investors to do. I capitulated. I sold Target, Sweetgreen, Block, Nike, Zoom, Asana, and half of my BYD position. My realized losses on Sweetgreen and CAVA alone were around $9,000. Why? Well, because I found a better opportunity. I moved that capital into Meta stock. Now you might ask, why Meta? It's already run up significantly over the last few years. Well, I have a video on my channel detailing exactly why I bought Meta stock, so feel free to check it out. Now, usually I hate chasing stocks that are already up, but 2025 was a weird year for Meta. They had that massive correction, about a 30% drop because of fears regarding their CapEx spending and the metaverse. Back in 2023, the metaverse was a gamble. By 2025, the ad revenue was a machine, and the AI integration was proving to be a real revenue driver, not just hype. I saw a company that was printing cash, trading at a 30% discount due to short-term fear. Instagram is one of a small handful of apps that I use daily and have been using daily for probably a decade. And the company is run by a 41-year-old young and hungry founder. CAVA and Sweetgreen are lunch spots that I occasionally visit, and quality has been on the decline in recent visits, not to mention the decline of fast casual due to young people watching their spending. I realized that holding on to CAVA, hoping it would bounce back, was a fool's game, when I could put that money into a highly discounted Meta, a company I had much higher confidence in for the next 5 years. This brings me to the concept of humility. It takes humility to admit you were wrong for 10 straight months. It takes humility to lock in a loss. But investing isn't about being right all the time. It's about protecting and growing your money. Sometimes you have to fire your losers to hire new winners. Now, I want to put these numbers in perspective because losing $25,000 sounds like a clickbait disaster title. Yes, I ended the year down $25,000 in cumulative realized losses. But because of the gains in the rest of my portfolio, thanks to those April purchases of Amazon and Google and the long-term holds, that $25,000 represents less than 3.5% of my overall unrealized gains. In the grand scheme of things, I essentially used those losses to offset my tax bill, cleaned up the portfolio, and reallocated to high conviction plays like Netflix and Meta. If you want to know why I loaded up on more Netflix shares in the last month, I have a few videos on my channel about that. To wrap this up, looking at this chart, I don't see a failure in November. I see a correction of behavior. Now, I'm fully aware that CAVA, Sweetgreen, and even Nike will likely go back up. In 5 years, CAVA might be a 10-bagger, and I might look back at this video and cringe. But I can't invest based on FOMO or stubbornness. I have to invest based on the data I have right now. My choice to reallocate to Meta and Netflix allows me to sleep better at night. I traded uncertainty and hope for quality and cash flow. If there's one thing I want you to take away from my 2025, it's this. Don't be afraid to change your mind. The market changes. Facts change. If you stay rigid, you break. If you're flexible and if you stay humble, you survive to invest another year. Thanks for watching my year in review. Let me know in the comments if you bought the dip in April or if you're still holding on to some bags from earlier in the year. And if you're interested in the top 10 holdings in my portfolio for 2026, click here. I'll see you in the next one.